Good morning, everyone. We'll get started at 10:30. And we do have the chat box open, so if you have any questions, comments as we're going along, go ahead and feel free to do that.
He's the president of the Petroleum Association of Wyoming. It's a post that he's held since January of 2019. As president, Pete represents Wyoming's oil and gas industry at the local, state, and federal level. He's a graduate of Natrona County High School right here in Casper. He also holds a master's degree in public policy from the University of Minnesota. Following several years of serving Wyoming in Washington, D.C. as an aide to former U.S. State Representatives Barbara Cuban and Cynthia Lemus, Pete moved back to Wyoming in 2013 to head up the Wyoming County Commissioners Association before taking the helm at the Petroleum Association. So welcome, Pete.
Thank you very much. Really appreciate being here. Can you all hear me okay? Great. Well, thanks. I know there's several of you who are on the phone, not watching on your computer. I'm gonna share my screen here for a minute, in a minute for some slides. Mostly the slides are just to keep me on track, but I'll make sure I say the pertinent things for those of you that are just listening in on the phone. Like Jerry said, I'm Pete Obermueller, president of the Petroleum Association of Wyoming. Just a couple things about PAW, if you don't know. PAW is the only statewide trade association for the oil and gas industry in Wyoming, all facets of it, from the upstream production, exploration and production companies, the large ones, all the way down to the smallest stripper well mom and pop organizations. And then midstream, the pipelines, gathering systems, those kinds of things, and then downstream refineries. And other processing, and then also all of the ancillary and vitally important organizations that help support oil and gas drilling in Wyoming, including the environmental consultation, drilling operations, those sorts of things, attorneys, all those who are kind of in the orbit of oil and gas. So what I thought I'd do today, if it's okay with everybody, is I will run through some slides just about what our current status is in Wyoming, and start off with a little discussion about what's going on globally in oil and gas, and then narrow that focus to what that means for Wyoming and where we're at in terms of oil and gas in Wyoming, given the unprecedented situation we're all experiencing right now. And then happy to answer any questions that folks have. So if that's all right, I'm gonna just click over here and share my screen and see if we can make this work here. All right, just want to make sure everybody can see that. So let me see if I can actually change the slides here. Hold on one second. I beg your pardon while I get this to work. There we go. All right, so here's what I'm gonna do. I already talked about this. Things I'm gonna cover here today, obviously the impact of COVID-19. What the heck are the Saudis and the Russians and the rest of the world doing? And does it even really matter anymore? And then just some thoughts. I don't have a crystal ball, but I have some thoughts about when and how we recover in oil and gas. I think it's important to discuss at the outset. I think you all know this. You know, Casper has a pretty high IQ when it comes to oil and gas operations. Really doesn't matter what business you're in. Folks up there know a lot about oil and gas and how it works. So I can spend a lot of less time on this stuff with a Casper audience than I need to with, say, a Cheyenne audience that needs a little bit more background on some stuff. And I say that with all love and affection. So you all know that oil and gas in Wyoming is, we always talk about our economy as a three-legged stool in Wyoming: energy, travel and tourism, and agriculture. The fact of the matter is, we would love for all the legs of that stool to be as tall and robust as energy is, but it just simply isn't that way. And you probably all saw, or maybe you saw a Wall Street Journal report the other day, came as no surprise to anybody in Wyoming, that we are particularly vulnerable when it comes to our economy when something goes wrong in the energy sector. So just to put some numbers on that, Wyoming's GDP, economic activity from oil and gas alone, not even talking about coal or any of the other mining or energy related activities. Oil and gas alone, our GDP is annually is a shade over $5 billion. The other two legs of that stool, travel and tourism and agriculture, combined don't reach half of that in an annual basis. So there's really no comparison, and I say that not as a criticism, because I would like for travel and tourism and for agriculture to be as robust, and would love to see that happen because I love Wyoming. But the reality is it's not. So we're just so heavily dependent that it is any of these sort of destruction that happens in our industry is obviously has massive ripple effects on government and other businesses as well. So I want to talk a little bit about that demand destruction. Really, that's the whole nature of all of the issues right now. These are from the Energy Information Administration. Talking about how they project our demand, reductions in production, which is a way to look at oil demand. I find this interesting on the graph on the left there. They're projecting, basically that we go from about 13 million barrels per day in the United States down to about 11 billion into 2021. Which isn't even as low as it was at the end of 2017 going into 2018. And they show on the right there how that looks in terms of lower 48 versus Gulf of Mexico. I have to be honest with you all, I'm skeptical of these projections, and I'll get into it in a minute as to why. But here's part of it. Average global oil demand, in best of times, not when the whole world is shut down, but in the best of times, is about 100 million barrels a day of production and consumption. The International Energy Agency, the IEA, has projected a demand decline of 29 million barrels a day. So hold on to that in terms of that demand decline. We'll talk a little bit about why EIA thinks that it will level off on the next slide. So this slide is liquid fuel. So, this obviously is the gasoline, jet fuel, distillate fuel, the things that Wyoming's Oil and others are processed into. You can see on that graph on the left, EIA projects a pretty steep decline in fuels consumed in the United States. And then they break it out on that one on the right in terms of how that looks. But you can see that what they have projected is obviously this steep decline in demand, which we've seen. Nobody's driving, nobody's flying, all that stuff. We've seen that happen already. But they project that it comes right back by the middle to end of 2020 and basically levels out at what it was over the past 3 or 4 years in terms of that demand for fuel liquids. So essentially what they've said is they're expecting a V-shaped recovery. And what they're saying about oil production in this case is if we have a V-shaped recovery like that graph shows, then we will have already having a destruction in the oil production. That what will happen then is demand will come back up for liquids, and we'll go back to being a net crude oil importer in the United States in order to meet that demand. My question is, and I'm not an economist, this is just my view from where I sit, is I think Wyoming needs to be prepared for a long-term U-shaped recovery, that we will not hit a bottom and come straight back up like that it will actually a longer-term bottom, and it will take a while for us to climb back out of that. So let me shift to supply for a second. To talk a little bit about Russia and the Saudis and how all that played out. This again is EIA's projection of our oversupply. Maybe you all have heard about the storage issue that we've been having. That's really what precipitated the negative price a couple weeks ago. This graph shows that the gray area is kind of the top and bottom over the past 5 years. And then the blue is what the actual was, and they have that forecast way up there in the oversupply. But remember what we had up there before was the 100 million barrels a day, and the International Energy Agency projecting 29 million barrels in demand destruction. Well, OPEC Plus that you heard about, that President Trump helped to negotiate, which was really good, they cut about, quote unquote cut, we'll see if they actually follow it, 10 million barrels a day. Well, if the demand is the demand cut is 29 million barrels, and they only cut 10 million, you can see that there is a significant delta there. In point of fact, 29 million barrels a day is more than what all of the OPEC Plus countries produce daily. So they would have to cut to zero in order to get to that. So obviously the United States and Wyoming and everywhere else has to be a part of the production cuts to right size the demand. So what does this mean for Wyoming? It's not good. That's my spoiler. Back in January of 2020, Wyoming Sweet was trading at about $53.45 a barrel. Most of you know this, but I think it's always good to remember that the number you often see on the news or reported in the the ticker or whatever you're looking at is usually West Texas Intermediate, WTI. That's the price. Wyoming, because of where we are, our distance to market and some other factors, we always take a discount from that. So whenever you see oil's trading at whatever, and it's WTI, which it often is, just go ahead and subtract $10 from that. And that gets you to what Wyoming is generally trading for. It's a good rule of thumb for you to do that. So January, 53.45, Wyoming Sweet. There were 23 rigs operating in Wyoming at that time. I think 7 in Campbell, like 13 in Converse County, a couple in Laramie County. There was 1 in Sweetwater. There were 3 going over in Sublet. So we were doing okay. About 8.5 million barrels of oil produced that month. Fast forward to today. Wyoming Sweet is trading for $5.60. As of my last check, there are 5 operating rigs in Wyoming, 1 in Campbell, and 4 in Converse. The rest have all laid down. And production, I can't tell you because we have a bit of a delay in reporting there, but I can tell you a couple things about that. Obviously, a laydown of that many rigs means, clearly massive reduction in new production, but also existing wells in Wyoming. Existing wells are being shut in at a pretty alarming rate, which means that wells that were already drilled that are in long-term production are uneconomical at those prices, and so just standard current production is also being shut off in Wyoming pretty quickly. We'll know numbers about production and shut-ins next month as that reporting comes in there. So natural gas was distressed anyway prior to all of this. And part of that, really the biggest part of that, was competition from Canada and the Permian Basin and all of that. So Wyoming's natural gas prices were already bad before COVID really took its toll. So we don't have any rigs running in Wyoming for natural gas, which is really quite shocking. We have the largest public lands gas field in the United States over in Sublette County, the Jonah Field, the Pinedale Anticline. Have no rigs operating there. It's really quite stunning. And you can see the production there. What's interesting about natural gas is, I just threw up a graph for those of you on the phone from EIA about natural gas consumption by sector. And it's really been growing and growing pretty steadily for a lot of different reasons. And the demand for natural gas, I think, is still going to be climbing like this. They project a pretty sizable increase in residential for obvious reasons and a contraction in commercial, but that will probably rebound as things begin to open up. The question for Wyoming is how can we remain competitive in that growing demand in natural gas, given our distance to market and our ability to operate on public lands at a lower cost. So with that, I'm going to just talk about a few things about what we've been doing at the Petroleum Association, individual companies, and all of that to try to weather this a particular crisis, and then turn our attention to recovery. And then I'm happy to take questions. I'm not going to focus on all these agencies. I would, if I haven't bored you to tears already, that really would. So I'm not going to do that. But I am going to cover on a few of the important ones that I think are kind of a little bit more interesting and important to know. On the state agency side, really what we've been trying to do there for the most part is focus on both regulatory and fiscal requirements that are put on oil and gas production companies when they shut in a well. So I just want to make sure, I know you guys all know this, but I'm just going to make sure we understand that when a company shuts in a well, that's different than plugging a well. A shut-in well is, the well is still open and can be restarted. It's not easy, but it can be done. The next step after that is plugging in and abandoning the well. When you plug the well, you've basically shut off access to production in that, clearly for that well, but even sometimes in that area or for that particular bench and reservoir for the long term, perhaps even forever, depending on what's happened to the reservoir. So for Wyoming's sake, obviously for the companies, but also for Wyoming's sake, as we're having this crisis where companies are shutting in their wells, it's our position that we want to make sure that we have a regulatory environment that companies can leave those wells in shut-in status rather than being forced arbitrarily to plug them. And there's a lot of regulatory requirements right now that force operators to plug wells as opposed to hold them in a shut-in status. That's been our primary objective, is to make sure that we can keep wells longer term in a shut-in status. So what I mean by that is generally after a shut-in, after a period of time, both the state and the feds, require an operator to, at a certain amount of time, plug or produce. They have to do something with the well. Well, now, right, that's fine choice in normal market conditions. Right now, it's abnormal. So a choice of plug or produce is no choice at all. It's plug. And it's bad for us and bad for Wyoming, is our contention. With respect, I want to mention the DEQ because particularly for our colleagues in business, I want to just make sure that we're really clear on what EPA and DEQ have done, Department of Environmental Quality. Wyoming in particular has a lot of interesting regulatory requirements that require physical payment of checks and physical signing of documents and that sort of thing. So in the very early stages of the stay-at-home orders in other states, recall Denver, Oklahoma City, Dallas, Houston, they are all under stay-at-home orders and still are. A lot of Wyoming's oil and gas companies are headquartered there. The question was whether or not we could actually get those signatures, make those payments, just physically, humanly, be able to do it. And so a lot of what DEQ did was moving to a situation where we could work to comply with a little bit of a relaxed environment in terms of timing. That's been characterized, including in a particularly misleading and unhelpful op-ed in the Star Tribune a couple weeks ago, as some sort of a free pass in terms of environmental compliance. We don't see it that way. In fact, we continue to operate as if that relaxation hasn't happened unless it's absolutely necessary because of stay-at-home or even sickness. I have some of my members whose offices have shut because of positive tests. That was a particularly important one for me personally as a Casper kid, a Wyoming kid. We know we can operate safely and environmentally sound way and still operate. It's not an either or situation. And that is an ethic that we all have and really value. So I wanted to just talk about that one for a moment. On the federal side, it's a lot of very similar things. We don't want the Department of Interior to arbitrarily shut down operations, those sorts of things. We were involved with the State Department in trying to push the Saudis and Russians to knock it off. and along with our colleagues in other states. So that was helpful. Our federal delegation has been very helpful there. A lot of the payroll protection programs and all of that has helped a number of our smaller operators, but even some of our small operators who are private equity backed were not eligible for those. So we've been working with the Treasury Department on other loan facilities that can help keep even small oil and gas operators afloat right now. So that in a nutshell is what we are working on. There's a lot more there, and happy to talk about any of that or any other questions. I decided to punt on talking about any of the stuff the legislature did because that feels like it was 100 years ago, but I'm happy to answer questions about any of that too if anyone has them. So I really appreciate this opportunity. Thanks very much.
Thank you so much, Pete. I'm going to let Jerica take over and she can open this up to questions.
So I do have one really quick, Pete. How is Wyoming pacing as far as the rest of the country, as far as the oil and gas goes? Are they just as dire as we are? Are they bouncing back for the communities that have actually been able to open up?
Yeah, it's a good question. We're really no different than any other oil and gas state. It's the demand destruction has impacted all of us pretty hard. The storage issue in particular has really been a challenge, and just to mention real quickly about that, really the issue there, of course, is refineries have really cut back on motor fuel, jet fuel, all that stuff. And so all the production we had isn't getting processed. They just ran out of places to put it, including in our own tank farms in Wyoming, outside of Guernsey, and others are just filling up so fast. And that, of course, caused kind of similar supply and demand. A couple weeks ago, the demand a couple weeks ago was for storage. And that's why you saw basically the price of storage went up, which led to that negative. And I don't see that changing in June either, or this month either for June contracts. We never, as the governor likes to say, we never closed here. Our operations kept going. But for us, it's really like everywhere else. It's really the demand issue. Until demand starts to kick back up, we're going to be in this situation, and we'll be back. We'll be back, but it's just going to take a little while. And I think Wyoming needs to be prepared that it's going to take us a little bit longer because we have barriers to entry in oil and gas here that other states don't have, which I can get into a little bit more if you'd like.
Yeah, possibly. And then you had mentioned on another call a couple weeks ago, I believe, that you guys were looking for really ideas, suggestions, anything from both the private and the public sector to assist with all of this. And I think at the time that pretty much revolved around the OPEC deal. Has there been anything new to come out of that from those different industries for private and public?
I'm not sure I understand the question. You mean in terms of how we recover in oil and gas, or are you talking more broadly?
The recovery.
Yeah, so state agencies have been mostly helpful, especially in terms of clearing away kind of sort of outdated requirements of physical checks and that sort of thing. They've really moved quickly to taking electronic payments and all of that, which probably should have happened previously, but here we are. In terms of recovery, it's going to be a little bit longer, and there's more policy discussions that happen there that need to be talked about. I think, really, honestly, one of them, and it's a little bit tough. It relates to what I was talking about at first about the three-legged stool, but it relates to our tax policy. And I know, as the chamber, and we tout all the time that Wyoming has the #1 climate for business, #1 tax climate, all that stuff. Don't shoot the messenger, but the fact of the matter is that is true for everyone but oil and gas. In point of fact, Wyoming's effective tax rate is the highest in the nation. We're more than double Colorado. We're triple New Mexico. It is shockingly high here. for oil and gas, and that is a barrier. There's no doubt about it.
Perfect. And anybody else with questions, feel free to unmute yourself and chime in.
This is Steve Lofton. I have a question about fracking. It seems like fracking is taking a hit because it's kind of the highest price way of getting oil production. So, and I think most of the Wyoming new production is fracking. So is that going to kill the Wyoming market for a long time?
Thanks, Steve. Yeah, I appreciate that question. Yeah, I mean, so the Powder River Basin has been a kind of the hot new basin for a while. The trouble is it actually is still a little bit on the side of being kind of still risky and exploratory. And you hit on one of the reasons. It's expensive to pull the resource from the PRB. Those are really deep wells, 2.5, 3 mile laterals, those sorts of things, and it's not cheap to do it. So that's what I think the Enhanced Oil Recovery Institute there in Casper has talked about at least in the short term, that our attention might shift towards our more conventional and legacy fields in Wyoming, which I think in part is really interesting because we have these amazing legacy fields. If you think about up in the Bighorn Basin outside of Cody, the Oregon Basin up there, those fields are 100 years old and have been operated drilled for 100 years, and yet they estimate they've only tapped about 30% of that resource. We can get more out of our legacy fields too, with enhanced oil recovery, making better use of CO2, those sorts of things. So I think they're right. We will see a shift of attention towards our legacy fields for a while. That's good. The downside is the big investments, the big revenue for Wyoming. The most jobs, all of that is in the Powder River Basin and those horizontal unconventional plays.
Pete, Pat Sweeney, if I could. So I don't know if we're gonna address much in this first special session, except from what I'm hearing, and I just hear stuff. I don't really know. I'm not on management council, but other than the spending of the 1.25 billion and how the legislature, the legislative branch and the executive branch, but I agree with you on that op-ed from the Powder River Resource Council. I think that's what they go by, but I felt Eli's op-ed in Sunday's paper was very direct and very, very good, which we all should support. Do you think, I mean, you're much more in the know with leadership than I would be. Are there some direct targeted bills that we could take on? From Representative McGuire, we're concerned also about those stripper wells and the very small producers when asphalt grade or sour is 38 cents a barrel the other day. What does it hurt that we back off on taxes? And the tax approach we took just this session really is only new production. Well, obviously that's out the door for who knows, maybe it might be a year and a half, 2 years before the demand catches up. So do you have any thoughts on legislation that I'm sure you do, and we can do this offline, but I'm sure the chamber would be statewide for the most part. I mean, you've got certain two counties that aren't into they'll sure burn the natural gas, but just getting a pipeline into Teton County appears difficult to serve their needs. So do you have any thoughts that the chamber and legislature can help with? Any information you can share?
Yeah, thanks, Representative Sweeney. Nice to see you. Yeah, so there's a few things. Really what we're trying to do is we're trying to think about this in kind of two buckets. One was kind of the immediate response to the confusing and acute stage of the pandemic. And that was really related to the things I talked about before. I won't repeat, but about, making sure our regulatory structure was flexible enough to handle it. When we start switching gears to economic recovery, becomes a little bit of a tougher question, and we're still working through it internally about what we think would be the most helpful. I think middle of May, Joint Minerals is meeting, and they have on their agenda, I think, a 3-hour discussion on energy strategy in Wyoming. So look for a little bit more then. But I'll say a couple of things. One, you mentioned the bill that was passed, and the op-ed we keep referencing mentioned that was like looting Wyoming or whatever. So what that bill did was it had all sorts of triggers in it before you could get a 2% reduction in the severance tax, but it is only for new wells and only lasted for a year, and only when you met a certain price criteria. When that bill passed, and it's still true today, it doesn't apply to any operator in Wyoming. So there's no tax cut for anybody under that bill of any kind. If we want to talk about, and I think it should be talked about, I don't have a policy prescription right now, but it should be talked about whether or not, as a policy, we want to be twice as expensive as Colorado. I think that's at least worthy of discussion. Number one, at least in the maybe in the short term, we can have that discussion. The other part that I want to circle back on the legacy fields thing, because it is really very interesting. So we all want to make sure that Wyoming isn't left holding the bag if there are wells that get abandoned and need to be plugged. So right now what happens is oil and gas operators pay a tax on their production in order to plug abandoned wells. So oil and gas pays for plugging right now. Wyoming doesn't hold the bag. And then on the front end, when you go to an idle well, when you shut in, you pay a bond to also help pay for that. Well, interestingly, the bond amount is about twice as much as the average cost of plugging a well. And what happens is that bond gets paid into the agency that holds it, and it can't go to work for anybody. It's not invested in any of the accounts the state has to earn any additional revenue for the state, and it's taken away from the business. You all know this. You have to pay the bond, and you don't have access to it in terms of any sort of investment or payroll or any of that kind of stuff. So what I'm interested in exploring is some way that we can make sure that we don't have orphaned and abandoned wells that we cannot plug, that suddenly the state's holding the bag, but do it in a smart way that allows for continued investment with money. I think OGCC holds $158 million in idle well bonds. It would cost $26 million to plug all of Wyoming's orphaned wells right now. So there's a bit of a disconnect there that I think could be helpful in terms of getting people to reinvest. Just anecdotally, there was a company that called me 2 weeks ago out of Texas. They were really interested in buying some assets in legacy fields. What they asked me is they didn't think they could close on that deal because the bonding policy was too onerous, and they wanted to know from me, is there any possibility of changing that? And I couldn't really give them a great answer to that question, but I thought it was striking that they called me and said they don't think they can close, not because of COVID or because of the demand destruction, or because of Wyoming's bonding policy. That's weird. So again, warrants some look.
Pete, not to hog the time, are those policy and regulatory decisions, or statutorily do those need looked at?
It's a little of both, Representative, but I think, right before joining this call, I was on a call with the newly created Wyoming Energy Authority that you guys at the legislature just created this session. And I know Governor Gordon is really interested in working with the legislature, the Energy Authority, to think really critically about an energy strategy in Wyoming. What do we actually want to try to accomplish? Not just in oil and gas, but in renewables and in coal and uranium and all that stuff. And so bonding fits. Bonding is a small part of what a strategy should be for our legacy fields. And legacy fields is a small part of what our strategy should be for energy total in Wyoming. So I'm pretty excited about that. I think it's a good move by you guys to create that authority, and I think that discussion is going to be taking place. We can tackle it kind of one off, and I went down the weeds on this bonding, but I think it's a broader discussion that we all need to have.
Thank you.
Pete, I had a question that just got texted to me, and it says, when oil and gas stabilizes, and we suspect that eventually it will we foresee permitting being easier and less restrictive?
Yeah, that's a good question. I guess it depends. So permitting from the feds, permitting from the state, I can tackle that easily because permitting from the feds will never be easy, period. It's just not easy. I don't expect it to get easy. What's challenging at the state side is we just completely revamped, completely upended the way oil and gas is permitted in Wyoming. It just went into effect in late December of 2019. And now, and with that, permitting has all sorts of these timelines and shot clocks and all this stuff, and now we're in the situation where the whole world's been upended, and it's really anybody. It was, the new rule as passed gives a lot of discretion to the Oil and Gas Conservation Commission to make decisions about permitting, and that was I don't know, a little source of consternation, I guess. I think people like a little bit more certainty. I personally was okay with it because I think the OGCC generally does a pretty good job there. But now with the world being upended, we're back in sort of uncertainty about how the permitting is going to work. So one of the things moving forward is to make sure, particularly if taxes aren't going to change, because we know how reliant Wyoming is, we need to work on ways to make Wyoming more friendly from a regulatory standpoint. We can clear away those burdens, make it easier, necessarily just streamline the way that permitting happens. That would really be helpful.
All right, anybody else? Okay, well,
I have a question real quick. Hello?
go ahead.
Oh, okay. And I don't know if this question is more directed at this, at Pete or our legislators, but you had mentioned earlier that our taxes in Wyoming are substantially higher for oil and gas than New Mexico and Colorado. And I'm just curious, with a state that's so heavily dependent on the energy sector, why is our taxes so much higher, and who would be responsible for working to make that lower? Is that a federal level or is that state level? Who's responsible for that?
Representative Sweeney specifically? No, I'm just kidding.
Yeah, no, I'd be glad to chime in. So it actually is in my opinion, legislative. We've tried the last couple of years. This was my fourth session, but it really it is 1,000% accurate what Pete is saying, and we've heard from little producers, large producers. That's why Anadarko headed to northern Colorado. Within a quarter of a mile of our southern border, they're drilling down there because severance taxes. And the whole tax situation down there is so much less than Wyoming. We could have had those wells, but we're very reluctant. You know, the conservation groups constantly are attacking us, just like the op-ed that was mentioned. We're giving it away, they're coming here anyway. Well, that's not true. And so the time is now, in my opinion, to try and do something and adjust. And I know that's less revenue, but 0 times 0 is what? Pretty obvious. Nobody's going to be producing. And the legacy fields, Pete's again 1,000% correct. And I noticed Dave True was on the call earlier. I don't know if he's still there, but it's worrisome. And having no natural gas producer in the Jonah field in the anticline. We heard about this coming almost 9 months ago to a year ago. And I don't know if any of us believed it would happen, and then this happens on top of it. But and that's a totally different situation. So I would say it's legislative. And I urge all the chamber members that are on here, we need to be supportive. And these oil and gas jobs, we're just gonna see more horror stories, I'm afraid, coming down the line. Whether you know, some of us have been through this before, and the Halliburtons of the world, the Schlumberger, the Baker Hughes, those large service companies, you know, it could be a really bumpy ride. So, but push your legislators to work with us, and of course Pete knows he can always reach out to myself and a number of our county legislators here in Natrona County. Have worked closely with Petroleum Association and Mining Association and those groups trying to make a difference. But wow, is it an uphill battle. But I'm hoping this time, Pete, maybe this has got folks' attention, I hope. So thank you.
Yeah, thanks, Representative. I think it's not easy. It's not easy for Representative Sweeney or the rest of the legislators, because you know, their staff, they don't really have staff, but there's that legislative service office who does analysis and writes the bills and all that for the legislature. They put out a memo a couple weeks ago about projected revenue declines for the state and over the next 2 years. Their optimistic scenario was a $555 million revenue shortfall. Their pessimistic projection was a 2.7 billion revenue shortfall. My personal opinion is that we're going to be closer to their pessimistic than their optimistic. And you know, so there's two ways to deal with that, of course. Reduce spending, which they have been doing already and they will continue to do, and there's find other sources of revenue. I don't need to talk too much about where other sources of revenue come from. Oil and gas and energy is kind of topped out. So, and take, for example, just your property tax. You know, the value, they take your house, the value of your house, but they only tax you on 9.5% of the value of your house. The value of minerals and oil and gas, they take the value of that and they tax 100% of the value. So we have nowhere to go. Other people have places to go. So that's very politically difficult for the legislature. I don't want to sugarcoat that at all. But from a revenue standpoint, we've got a little bit of soul searching to do, unless we have a V-shaped rebound like some people hope for. I saw, Jared, there was a question that came to me from the chat that I'll just answer. It said, aside from the financial assistance to mom and pop operations, are there any additional steps being taken to protect the smaller in-state operators from competition and or consolidation, especially from out of state? Yeah, so I think one of the interesting things to recognize is that about 80% of the operators in Wyoming are small operators that qualify as what is called stripper wells, which are just low volume wells. And so, we have a lot of those smaller operators. However, they account for a pretty small percentage of the total production. And it's really, in terms of those unconventional plays that Steve was talking about earlier, those are the larger companies. Most of the companies that operate in Wyoming are independent, even though they might be large. So we have is a lot of private equity backed, a lot of mom and pop, and then some of these larger companies. And really, in terms of Wyoming's economic output, we need all of those to be successful. So for the small mom and pops, I think talking about defining some tax policy with respect to those stripper wells, really low volume, that would be very helpful. Really just like all your businesses, cash in hand to weather the storm, super important. So that's one of the things that we can really talk about. But really all the stuff, the leaseholds, the bonding, all that kind of stuff we've been talking about, that helps people from top to bottom in terms of their size and operation. So really everything is on the table. All of my members have been thinking about ideas and trying to push various ideas, and we'll be taking all of those to the legislature. I got a couple other questions here. Do you know how fast bonding gets returned to responsible operators that do plug wells? Yeah, it's a great question. The safe answer for me there is I don't know, because, and the reason why I say it that way is because there seems to be a little bit of a disconnect going on right now between operators and the regulator in terms of the answer to that question. And I can say that what we're engaged in is trying to have a constructive conversation with the state and with the agency to try to get a handle, particularly right now, about that cash. Obviously, if you're an operator that believes you've met your obligations to plug a well right now would sure be a great time to get that bond money released. And there are some anecdotal instances of that not happening. But I don't want to pretend that those anecdotes are a trend, and that deserves more conversation. OSL, Office of State Lands Investments raising prices on easements and surface impact payments. Do you know if they are reconsidering their process with the downturn? State Lands has been helpful. They were operating on a case-by-case basis with regard to leases. And also new bonding and that kind of stuff. They've been really helpful on a case by case. I can't really give you any reporting about exactly what they've done because it's just up to operators to request from them rather than a blanket policy. But you bring up surface impact payments, which I think is really a very important thing to discuss. That one of the major challenges in the Powder River Basin are those surface impact payments. We, of course, operators, need to engage with surface owners, in order to access, and that the expense of that has been climbing, and all of these things factor in together about whether or not a well is economic. And really, the issue of a split estate, the surface impacts, landowner relations, all that kind of stuff, that's probably absent a global pandemic. That was the one issue that's keeping me up at night, is that issue. And it's a long way from being solved in a way that's helpful to us or to the landowners, frankly. And it's probably will dominate my time, assuming we can get out of this mess we're in right now.
All right, wonderful. Well, Pete, we really do appreciate your time. I know you had another meeting following this, so, again, thank you for all of this information and for laying this out for us. I do want to throw out to everybody still on the call, the Casper Chamber is hosting our post-legislative forum. It'll be a Zoom session this year as opposed to in person, but we will have our legislators on hand really to kind of talk about the bills that both passed and failed this session. With COVID and everything that happened, I think unfortunately a lot of stuff happened that we just flat lost track of. So we've got the Senate side of the House of Representatives kind of talking about all of that. If you're interested in registering for this event, I will put the information in the comments. Otherwise, everybody have a great day. We do have this call recorded, so if you'd like a copy of it, you can also email me as well and we'll get it out to you. Thank you everybody for your time, especially everybody outside of the Casper city limits. Thanks for tuning in.
Thanks very much, everyone. It's a lot of fun. Have a good day.
Yeah. Bye.
Thank you, Pete.
Thank you. Great job.